What's up, people? How we doing? We back. We are back in the business. Now, I just noticed that this has a bullish bias on it. Now, I don't think it actually does, because we haven't confirmed today's gap, but there is potential for it. We've been super busy lately. Last couple of days, we've been working on our new indicator that's coming. And it's going to ultimately allow you to have everything that's on my chart right now, but just with the click of a button. Instantaneous. Now, it is a relatively complex code, so at the moment, we don't have it in place, but we're working on it, and hopefully we'll get there soon. What's going on, Nick? How you doing? Hope you're good, my friend. That's not a 4-hour high. That is a 4-hour lie. That's what that is right there. So in here, you can see that we have some 4-hour lows highlighted that have been taken out, so on. But ultimately, we are looking for a bearish movement to the downside. Now, we have some 4-hour highs that we may, I think that's a daily high as well. So we can get rid of that. 4-hour highs that we may actually run into and intersect. And you can come down here onto the lower time frame. You can see that we've taken out the daily high. We had a short run down to the last 4-hour low. Price came back, took us out break even. That was set last night, early hours of the morning. Honestly, I didn't actually mean to leave that alert, that order in place. It was only when I woke up this morning around here and it was running down, and I said, well, I'm going to break even at that nearest point of structure, because that's how you manage the position, and then we're going to look for pricing to ultimately go back into the continuation phase. But it didn't. It came back in and took us out at break even, but that's fine. You can see our bias here is bearish. We're going to go across all of our charts, and we're going to do exactly what you've seen here, or what you can see here. We're going to mark it down from the top down to the bottom, just to show you that you don't have to lean on an indicator. You don't have to lean on an indicator. Like it's something that is it's like a commodity, you know. It's something that you should be lucky, you know, that you have that ability to do that. So we're going to start with let's just start with euro. We'll just start from here, and what we're going to do is we're just going to clear off everything. 184 drawings. We took an L yesterday on this one, so be it. You know, we wanted to sell from the highs. It happens. Let me come back out to here. Yes, you can see the way it clutters up, and we're just going to remove it. We're going to start from the daily time frame. We're going to work our way down. Our bearish bias is already in place. We don't need to highlight anything to represent that. We know that's in play. So we have daily structures. Now, dotted lines are structures that have been taken already, and anything outside that hasn't been hit, so for example this, or this, will be marked as solid lines. And again, I have been recently marking them as 2 pixels, just so you can depict them on a lower time frame easier, right? It just gives you a little bit more reference there, and then we can get some text on those, or actually we can get some text on these, or we can't. So daily high, top, right? And daily high. Then we can move this down here, bottom, DL. Cool. So our daily points are in place. Brilliant. Come down to the 4-hour. Should still be able to see these points. Yep. You're going to start to see the points of relevance here. Now what I'm going to do is just add DL into that bottom and make it slightly thicker than what it is now. And again, same for here. That's a DH. Mark that in there as well, right? Now we're on the 4-hour time frame, so we do have some smaller time frame points to reference off. And what I'm going to actually do is I'm going to set this as a template. Again, you can do the same thing. So save as S daily high, right? So that stands for swept daily high. Actually going to change that so it's not all in caps. Cool. Okay, and then we're going to do the same for this. Swept daily low. Cool. Okie dokie. So we have this right here, which is going to be, these are all going to be 1 bar. Okay. Now remember, with the indicator, it's going to highlight these points for you automatically. Now, it's not something that you need because you can reference all of the stuff that you're taught in the Keep It Simple series, which again is completely free. You can find that in the Pip Surfing Society playlist section. Cool, and this is where we're getting to right now with this. Notice how this is like a high volume area right here. All highs highlighted there. Cool. That's a non-met point. So it's here and here and here. Now remember, we have got, and we do already have, a clear idea of what we want this pair to do. We spoke about this yesterday, and we're looking at the lows being taken out here. Now we have 4-hour highs, so we'll just set that as we don't even really need it to say hi, do we? We'll have it say hi anyway. I like the way that looks. I think that looks clean. So we'll save that as let's just get rid of that. Yes, and we'll get rid of that and that, and we'll add it in as a new template. Cool. So now we can go bump, bump. Like that. They all become the same. Same as here. They all become the same. And then we could do the same thing, but what we'll do is swing this down here. Delete this. Change that from top to bottom. Put this as low. Sorry, bottom. And then we can set that as a So then we can do the same thing, like so, like so. Beautiful. So that you can clearly see everything that's been taken. Now, you don't need to have these highlighted, but the reason I've got them highlighted is because I've had a couple of questions from some of the students regarding what these points are that you're seeing that have been highlighted or taken out. So if they're labeled, you can just clearly see what they are, right? You don't need to ask the question, what are they? You can see what they are. So in this case, it gives you a very clear understanding that you're looking at 4-hour lows, 4-hour highs, and so on. So let's just double check here that these are uniform. Yes, they are. And same with this. Yep. Okay, so apart from that, we are now looking to highlight these. This would just be a standard 4H high. And you can save that again as 4H high. Do the same thing, pull this down to here and adjust it. And again, I want to show you guys this because we've been talking a lot about indicators lately and how you'll not have to do much, but at its core, you shouldn't always rely on an indicator, and you shouldn't actually expect an indicator to fulfill the job that you are ultimately trying to take up. So it is important to remain fully where's the did that change? Wait a minute. No. 4-hour high? There's no 4-hour high in there. Right, there we go. There we go. Yeah, it's important to understand the principle that the indicator is delivering and why it's delivering that, rather than being completely reliant on it. Awesome. Right, now we can highlight the rest of this. Go like this, 4-hour lows. Brilliant. Now we have a very clear understanding of what we're looking at. We actually have low that was taken out here. Now our bias on this is bearish. Now when we come back down to the 15-minute, the idea here is that for each point where liquidity is transferred, we have a reference, don't we? The money in, money out becomes our reference. So in some cases, the money in, money out is going to fail, like so, and in other cases, it's going to work. So it's always important to make sure you maintain the understanding of probability, not of constantly trying to hunt down the next winning trade. It's about executing consistently across a movement or across a given price delivery. So keep that in mind. What's going on, Void? Hope you're well, my friend. Hope all is good. And before that, we don't really have anything else, do we? Here, actually. So same thing applies now. Until we see either a point of daily price action, which we can actually clear off 90% of this. Visibility daily. Cool. So notice how we wiped off, how many drawings was that? Close to 200 drawings, and we've reapplied the exact same logic and the exact same systematic principle within what? 10 minutes? Not even 10 minutes. Yeah? Appreciate it, dude. Appreciate it. Just starting to sort of hit the final points where we're starting to refine it down. At the moment, we're still on the fence about the indicator. We actually hired somebody to code it, and they're failing to meet some of the criteria. So there is a bit of a delay on it at the moment. We have like the core of it, but that's fine. You know, it's all right having a core system, but without having the full fulfillment of what we want, it kind of doesn't really serve a purpose. So at the moment, we are a bit, we're not 100% on it. But thanks, appreciate it. Yeah, the indicator that you've seen the members using, or some of the members using, is the indicator that I created. And since then, because I'm really not that capable at coding, we've reevaluated and gone back to, okay, let's outsource this. So I'm just gonna do this quickly on the daily. Just gonna make these thicker. I think they need to be thicker, right? Just to be easier seen. And again, you can see our bias in the top right. We don't need to reevaluate the daily time frame every day if we have this bias in place already. Down onto the 4 hour, you're able to see the highs and lows within here. It may look like a lot. But ultimately, the only thing you need to worry about is this. And this is what I always say. It's about keeping it simple. This does not look simple to a lot of people anyway. It's all about doing this, right? It's about understanding the points where the money still sits and where you expect price to go. So because our bias is bearish, we expect price to move down. So based off of that, we either come up to collect one of these points, then we move in that bias direction, or we come up to collect these points and we continue moving against our bias direction and we're technically wrong on that. Or we don't pull back, once this comes down, and we just continue to run through the target lows. Now, either of those scenarios, or those three scenarios I just covered, is possible, but all of the stuff with dots on it, so anything that's not a solid line, you do not need to really pay any attention to unless it's the most recent line that's taken. So for example, with a bearish bias, this is the most recent line that was taken, so all we need to do subsequently is follow pricing until it delivers X, and then we expect the continuation of that trend to follow on. If it doesn't, then it doesn't. Remember, it's not about being correct. It's about having a rule set applied to a chart that allows you to have a consistency across a longer period of time. That's all it matters, right? And as well, even though our bias was bearish and price pushed up here, why do you think that is? Well, look at what we have here. We have a daily low, a daily low, and a daily low. So we have three major points of liquid gathering in one area, right? Below this low already, which is intermediate. Now, if we come down to a lower time frame here, and we look what happens here on this lower time frame. Now, we did walk through this on the live stream as well, so you guys can go back and look at this. We have this area delivered, right? this area is the point that pricing shows you that there is potential for long movements to come into the market, right? Now, why is it that even though our bias is bearish, we anticipate this delivering a bullish bias? Well, it's because of the representation of daily lows and highs within the market movement itself. So again, if you want to learn about that principle, you can go and watch the counter trend movement that we have in the Keep It Simple playlist. But you'll notice how consistently these areas have movements away from them on the 15-minute time frame. Here, didn't work, came straight through. So be it. So be it. And that was after taking a daily high as well. But why is this not a complete failure of a point here? Why is that point not a failure? Well, if anyone that uses this system on a daily basis knows, a zone or an area of the money in, money out principle always refers back to the high or low responsible for the liquidation that causes that area to be produced, right? So before price came up through here, where was the liquid? The liquid was here and here. So where is the high responsible for taking that move up? Well, it's here. So your stop loss will be placed above that. And we explained this as well in the live stream. And this is where you can then wait for an internal high like so to come in, and it will give you another zone for price to sell from, right? Now, it's not always going to do that because it's not always going to deliver big, ugly highs. Forgot to mark this up. But it's not always going to deliver big, ugly highs like this, where you're going to have an outlandishly large stop loss. But it is something that happens. And that's why it's important to use your understanding and your logic to say, okay, well, because it's delivering this, maybe there's another way I can go around this, or maybe I should look to apply a lesser risk reward principle to it. So let me just respond to this message here, guys. 1 second. Right, back. Okay, so we understand what we're looking for. We know what we want to see. So let's move down to Euro JPY. Okay, Euro JPY, we have a bearish bias. Let's delete all 26 drawings. Start on the daily time frame. And we will go straight into it like so. This will be technically a daily low if we confirm this candle, which we have 9 hours left. So we have a little while left on that one. And we don't really need to highlight much more than what we have here. Reason for that is because if price goes down from here, then we're going to be tracking internal structure for the sell move itself anyway. We're not going to be too worried about lows that are formed over here. Now you can of course have something like that and say I'm using that for a target. That's fine if you want to do that, but you don't really need more than what you have referenced in the immediate vicinity. So right here we can now we can set these as daily high Okay, we can set these as S daily lows. Let's actually refine the elements here of this because we want this to be more visible, right? Oh, fuck it. What did I do there? I'm messing it up. 1 second. Right, here we go. Highlight these. Settings. Tab. Apply default. No, we don't want to apply default. Save as daily high. Save. Yes. Okay. There we go. Right. Now we can apply this. Daily low. We want the same thing. Double up that thickness. And again, you can change the colors of these. Like, you can make these whatever you want. And I encourage you guys, if you have a multi-screen setup, I encourage you to do what I'm doing right now. Go onto the same pair and follow it. Rewind it if you need to. Follow it. The reason I'm showing you guys this is that I consistently say, oh, look at this indicator, it's showing you this, this, and this. The indicator is coded off of the knowledge that we've applied into it. So you don't have to lean on that indicator. So I'm saying, save as daily low. Save, yes. Okay, brilliant. So we have our daily low in place. We have 2 daily lows in place. Remember, daily lows are points of relevance where counter trend moves could come into play. And if you want to learn about that in depth and in detail, then you can do that with our latest video that we have released. So now that we have all this stuff relevant, we can go like this, settings, visibility, and make sure it's available on our hourly time frame, which it is. Great. Let's go down to the 4-hour time frame. We can now see the daily structures right here. So we can reference those. And we can now start to track our 4-hour structures. So the best thing to do, personally, is start from current pricing and work your way back. The reason why I say that is because if you do that, you know that everything that you're seeing on current pricing is being covered rather than you coming down to it and being like, well, that doesn't make sense. So start from where you are and work forwards. So we have an hour left on this, so we can't cover that. Daily high, sorry, not daily high, 4-hour high, 4-hour high. These are both 4-hour highs, so we can highlight this and we can do these as swept 4-hour highs. Very clustered up here. Now what we can do is use these to just drag and extend and highlight all of these. Now these are outstanding highs. These are not swept highs. So we'll change the characteristics of these when we get to that part. Now there are, of course, a couple that are swept. So we can make sure we keep those dotted. Just for reference, again, you don't need to highlight the stuff that's been taken out, but it's understanding and referencing that's going to be the important thing when it comes down to you actually being able to read your chart. Remember, the chart is a language. You applying this is like you applying a translator to it. So notice the name of that alert. This is the baby version of the full indicator. So we'll get onto that in a minute. So let's highlight these and just put these as 4-hour highs. Okay, brilliant. Now we can see those. Excellent. So there's no other 4-hour highs in this immediate area, so we can move on to our 4-hour lows. So I'm going to start off in here. And again, I do recommend starting on the bottom of price. But if you'll notice why I've started here, because apart from that low and the daily low, we don't actually have any yet. This isn't a low because it hasn't formed the next candle. So we're still looking relatively high up in price here. Let's highlight these, make sure that they are... Nope. There we go. Like so. 4-hour low again, taken out right there. Another 4-hour low taken out. 4-hour low taken out. So what you should generally see in a bearish bias market or a bullish bias market, the side that you are biasing should have more lines that are met. So for example here, if we look at the amount of highs that have been taken out, we have 1, 2, 3, 4 within the whole thing. If we look at the amount of bearish movement lines that we have taken out, including the daily low, we have 1, 2, 3, 4, 5, 6, 7. So we have almost twice the amount. So again, you can see that bias coming into play as the actual pair is moving and developing its direction. So from here we have, and what we will do, I will need to pull that indicator script actually. Okay, not a big problem. So from here, we're just going to wait for this. We've got an hour for this to close. Come down to the 15-minute. And you can start to understand what's happening with the current pricing. So if you look here, from this move itself, there is only one area that is developed. So there's no gaps, 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 until we get to here, which is 6 a.m. And there's a gap just in there. You might struggle to see it. Just in here between these 2 points, right? So that's the only point that's given. Now again, it's not really ideal trading at 5 a.m, but it's not about that. It's about the idea of following the logic and the principle across each time frame. So from here, we can just highlight that. Then we've taken out this high, and we've actually had no areas presented until here. Now, it's not really ideal because we want it to be on the initial high down. We don't want it to come all the way back and then deliver a space off of a totally new movement. So the bias is bearish, and we're looking for pricing to come and take out this daily low now. We had one sweep of a short-term internal high here. Price action did not deliver down. Also, I would probably argue that on some brokers that wouldn't even be a gap. So, you know, we're on the fence about that one. Again, 5 a.m. entry, not really ideal. But we've given a new entry now, and we're looking for price to come down. You'd be using that point as your point of reference for protection. But for now, we've had no tap into that area. Price is just continuing in its directional bias. So that's what we'd be looking at. We'd be looking at price coming down through into these lows, into the daily low. If an area is developed against the daily bias from that low, then you can look into that as well. Again, always recognizing the direction that you're trading in based off of trending or counter trending. Let's go back over to Euro because we did mark this up, didn't we? I'm just going to get some tunes playing. Remember, guys, if you do enjoy this stream or you're taking anything away from it, even the tiniest piece of information, then make sure that you hit that like button. Remember, our bias is in the top right, so you don't even need to wonder what the bias is. It's right there. So Keep It Simple Part 3, which is ultimately the middle episode of the 5-part series, has the least amount of views, which to me is very telling. People aren't willing to sit through the middle and the bulk of the education. They want to start and get an understanding, and they want to jump straight to the end. So if you are watching the Keep It Simple series, make sure you watch it from part 1 to part 5, and then you watch the ones that aren't part of the 1 to 5 afterwards. Otherwise, you're going to have gaps in your understanding, and it's important that you don't have gaps. Any of my students, especially the guys that are probably here in the live stream, any of you will know, and you'll be able to validate this, that it's all about seeing through the whole educational from start to end. It's not about just jumping to the system, because the system itself is only going to be applied at the point of you fully understanding. Okay, let me... So, like, my chair is extra squeaky today. I don't know why. Okay, so remember, if you have any pairs you want me to look at, I'll happily look at them. Here, so... What's going on, Void? Hope you're good, man. Hope you're good. Slow progress better than no progress. This is true. This is true. What are your thoughts on Darwin-X? I think I'm starting an account in New Year. Darwin-X. Is Darwin-X... I've definitely heard of them before. I can't remember in what context, though. Let me see. GU? Okay, we'll go GU next. Darwin-X. Let me see. Oh, I know this. What is this? Right, okay, yeah, I see. Okay, so it's kind of like a MyFX book, in a way. Okay, yeah, I see. That's cool. Yeah, I mean, I don't actually have the investment funding. Yeah, so the idea is you trade on it, and if people see your performance, they're like, it's good, then they invest into it. So it's kind of like copy trading on other platforms. Yeah, it looks good. Oh, I see. And they've got three different. Yeah. I see that. And this is the first time that I've seen this, right? 62% of retail investor accounts lose money when trading with this provider. That's very low. 62%. Um, that's very low. Normally it's like 70, 80%. So that's good. And the thing with it as well is you have to think about that statistic. It says 62% of people lose money. That's fine, but it doesn't mean that you lose it completely. It just means that you'll lose X amount of your account. So, yes, that's cool. I like it, mate. And that could actually be a very viable option for our automated bot when our bot goes automated. Okay, so as requested by Nick, we're going to go GU now. And we're going to do the same thing. We're going to wipe off 72 drawings. We're going to go to the daily time frame. And we're going to start from the top and we're going to work our way down. Now it says bias bullish. This is not correct. And this is not correct because I'm pretty sure. Let me. 1 second, guys. Put this over here. Yeah. Yesterday, November 26th. That is correct. You can see how much code is on here, look. $239 lines. Okay. I can't confirm that's the latest version, but that's not correct. That's wrong. This should be programmed so that doesn't actually happen. But we know we're biased right now. We're biased? We're biased. We know we're biased right now. Bearish, okay? Alright, so we're bearish right now. That's fine. That's all we need to know. Okay, and then we're going to go like these two. Mark these as our daily low. Beautiful. That's perfect. Mark these as daily highs. Again, really easy. Daily high. Beautiful. Keep those nice and chunky so when we go down to lower time frames, they stand out to us. Why do they need to stand out? Well, again, you can learn the relevance of that from the counter trade video that is out. These two have both been taken out, so we can do those as swept daily lows. Now, let's double check this before we go down again. I mean, we could do that, but double check. Cool. Down to the 4 hour. Beautiful. So remember what I said before, best place to start is where you're at. So here, if you have these coordinates on at the top, this is open, high, low, close. So what you can do is hover over a candle and it will display the candles characteristics and open, high, low, close. So if you hover on these two, because you're looking at this and you're saying, oh, I don't really know if this is high or not. Just look at the high number, right? Look at the last 3 digits of the high number. I'm going to go on this. So it's 826. Move across to here. It's 831. So we know that's a high. Easy as that. This is possibly going to be a low, but we've still got 45 minutes on that, so we won't highlight that yet. This is also a high. So notice how we've got the 2 closest highs already highlighted. This is why it's important to do it close to price. And it also tells you that you aren't going to make any mistakes moving back, because now, what do we have? 2 daily highs, sorry, 2 4-hour highs and a daily high. So we're going to notice if this gets taken out, right? This is wrong. This is an initial version of this indicator. Let's see actually if this one has any of this. That's still, maybe this one's. Okay, maybe this one's correct. We'll see. Again, it doesn't really matter. We're trying to show you without that today. So from here, we can go back and track some of the other points. So we have another high right here. So we've got quite a clustered up high here. So we know that this area is relatively rich in liquid. Yes, we know this area is relatively rich. There's no highs in between here and here. Now we're going to highlight the lows. And this is where we start evaluating our let's see. This is where we start evaluating our targets. Go mark these 4-hour lows. So remember, guys, if you have questions, ask the questions. There's 10 of you in here right now. I know that a lot of you guys are probably regular viewers and you completely understand what I'm doing. But if you don't, ask the questions. I'm happy to answer them. Obviously, if it's going to involve me going crazy deep into the understanding and the principle, then the video series is going to be the best option for you. But everybody that's already watched the stream more than once knows that I'm happy to answer questions and give you guys the information you need. Alright, let's double check this. Bomb, bomb, bomb. High is identical, so we're not marking that. And we'll go across to here. Again, so check these two. See the high? Notice the high flicks down onto here. So this is lower than this. So that means that this is not a high. This is, though. You can clearly see that. Alright, same here. What about this? High, 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 high. Nope, no high there. There's a 4-hour high right here. Again, you don't need to highlight these. You can see like these don't serve any purpose for us. What I'm doing is highlighting it as if we had highlighted them previously. So remember, guys, if you aren't already signed up to the automated trading bot shortlist, then you can do that using the link in the chat right now. And that link is going to give you exclusive updates when we have updates to any information on the bot when it's being delivered. We will be sending out some emails shortly on the statistics in the initial testing phases. So you start marking on daily. Exactly, my friend. Daily time frames where you start. That's where you establish your bias. And remember the bias establishment. Easiest way to learn that and employ that into the principle of what you're seeing is to watch the Keep It Simple series, because it's relatively short and you're going to have a much better understanding. But yes, start marking on the daily time frame. I wish there was a way to undo that hotkey for the Morning, Andre. Hope you're good, brother. Did you see my DM? I didn't. I will check it. I will check it. Okay, so once we've got these marked up, that's great. So now let's just double check. Do we have any unaccounted for lows? Only outside of this area. I'm not too interested. Okay, so no. That's all the highs and lows marked. So we go 15-minute now. This is where we can begin to identify where each point meets the next, right? So we can go from here. We can say we're bearish bias here. This is taken out. So where's the gap formed? Well, the gap forms here. So that's where your position would be. Price taps in, sells beautifully. Okay, great. You'll be targeting the closer lows that are here. And right here. Now, something that you will learn using this system is that if pricing stays in the direction we want it to, doesn't tap into the area that we have marked. If it doesn't tap in relatively quickly, this is going to invalidate. Okay, same thing here. We had this area, that didn't work out. Didn't work out. Simple as that. Didn't work. So be it. No FEG formed here. The next out move happened here. So a small move away from there, your stop loss will be up above this high. we're now looking for the highs to be taken out for a new sell move to come in. That's what we're looking at. So in short, we had one move that played out quite nicely, one move that would have been cancelled, one L, and then again one move right here. I don't know what time that actually came in. Let's double check that. That's 10 p.m. So you're not going to trade that. So again, this is displaying very clearly the probability ratio of this system, which we have consistently explained to you guys over and over and over. And it said that the system itself is not about high hit rate and it's not about high trade rate. It's about trading off of a systematic entry model. You don't understand the concept of the red boxes on the 15-minute time frame. So this is the money in, money out principle. And again, have you watched the part 1 to 5 of the Keep It Simple series? That's my question to you. If the answer to that question is no, then you need to go and watch it, because that is going to explain it in its rawest form, from the very baby steps into the actual drawing and analyzing onto the chart. And the reason for this is because each of these boxes represent money in from a point of liquidity being retrieved, aka a high in this case. Okay, so it is highlighting the first point of the money in, so in trend, coming into the market. So Euro GBP later day today, got to rest the eyes from the charts. Of course, dudes, take it easy, brother. Mind how you go. I'll see you in tomorrow. Okay, so bullish bias here. Daily time frame. So if we just start by marking our daily highs, great. And we don't need to highlight everything going on here. Cool. And we can just grab these and mark daily lows. So we can go daily low, S daily low, right? We could do the same thing for the daily highs, or a daily high there that was taken out. Mark that as S daily high. All right, super. Now we go straight down onto the 4-hour time frame. Brilliant. And again, you can see our bias is automatically displayed top right. See the daily lows taken out here. Start off at current price action. Let's zoom in for this so you guys can see it easier. There's a lot of lows in here. Okay, so these are 4-hour highs. 4-hour low. Lows that are taken out. Okay, so that is just a 4-hour low. And then we can do our highs. There's not many of them actually. There's some. So we'll mark them. Oops. Okay, mark those. These are S4H highs. Okay, same here, right? So, as I said earlier, we are working on an indicator that will do everything I'm showing you here instantaneously, giving you your bias, giving you your highs and lows, alerting you when these areas are created, alerting you with money in, money out. But you don't and shouldn't lean on that indicator to give you everything on a plate. You should be completely competent within the understanding of what that indicator is functioning around. The principle I look at it as is you wouldn't be able to buy a Tesla and put it in auto drive without having a license first. It's exactly the same thing with trading. You shouldn't be applying an indicator to a chart that does things automatically when you have no real understanding of what it's actually doing. Now, of course, I'm not here to tell you what you can and can't do, but I am here to guide you on what is the most realistic thing to do. So we are bias bullish. So we're going to come down to the 15-minute time frame now. And you're going to see that was taken out. That's a market close low. And we had a short-term push here, and then price came down again, which is fine. Again, don't expect every trade you get into to work. I say expect it to fail, and then if it works, you're happy, right? So that move didn't work out. So we're looking for major lows to be hit or price action to push up. What's going on, Martin? Hope you're well. And we can go back over actually the other highs and lows that were met. If I can even... Can I have that, please? Thank you. That wouldn't be valid if it's taken a market close. This is also taking a market close, so that won't be valid either. Here, big move to the downside. Where's the gap? So the gap is actually here. What am I doing? Here. But as I explained before, when you have a very large wick produced, like so, generally these areas are going to form around the mid area of that. Your area of protection would be at the base, and price action traveling higher is what you'd expect. And this is exactly what I showcased to you guys on Euro. We'll go back to Euro N, and I explained it here, right? I explained it here. So this area was swept really aggressively. This is the high, this is the low. Look at the way that's formed around the mid area. Price action did go bearish from here, but this is the higher point that I spoke about. Now, in this case, we did have another 4-hour high that was taken out, which provided you ultimately a secondary area which a true move came from. But it's really not going to have a huge amount of high reward usability when it gives you these big old, generally they're fundamentals, big old fundamental moves with an area that opens up around the middle of the range. So it's not that usable. Not the end of the world, but it is going to happen. So when we come back over to Euro and you see that point here, you get the move. So you're bias bullish. You get a pretty solid bullish move from here. Ultimately, you could have bought anywhere within that range and you would have seen price go above your order, right? That's not what I'm trying to show you, but the idea is when you see these outlandishly large sweeps of liquid, probability is that it's not going to deliver a precise entry to you. Can't believe the GJ has been tanking so long. Looks like this British pound has some difficulties. What's up in the UK? What's up in the UK? A lot of shit, mate. That's what I could tell you. A lot of shit. Again, same sweep here. This isn't going to be valid because it's a market close sweep. Yeah, there's a lot of shit going on. Bitcoin breaks 100k. We can have a little browse at that. We can have a browse. 100k USD. Let's go, right? Let's go and have a look. Don't understand why that's not displaying correctly. There we go. So we have a bearish bias. Again, I personally don't think this is going to run bearish, but you know, we'll see. I'm not predicting it to fall. I'm not predicting it to fall. But again, based off of my understanding of Bitcoin and the way that price is doing what it's doing, my opinion is going to be different to what my system is going to tell me. So let's just mark it up and see what we get. Let's do that. Let's mark it up and see what we get. The thing you've always got to remember with Bitcoin is the more it becomes publicized that it's getting higher, the more people begin to sell their holdings, and the more people begin to ultimately push the price lower because people are buying at higher and higher prices, meaning that it pushes all of the low holding investors into better positions, meaning that if someone's, let's see what we got here, 1 second. Yeah, it's high. If someone's holding at a really good position, then they're easily able to liquidate a large amount at once and then reaccumulate at the same price, if not a slightly better price. We saw it before, so we'll go back over to saw it before over here. It hit an all-time high, then we had the sell-off, then it starts buying back, and then we get the heavy liquidation. Then the same people that cause that liquidation buy back in, push it up to a new all-time high. Then we dump all the way back down to their original investment points. They get back in, and all of the guys are left up here trying to sell when it just goes high again. So it happens, you know, consistently. Okay, so that's the daily time frame done. Let's go down to the 4. Ooh, we're pretty sparse on 4-hour highs in here. Okay. Cool. And for anyone watching me do this thinking, why the fuck is this guy moving so quickly? This is something that you'll be able to do. When you spend enough time on the charts and you begin to read the language and you see it fluently, you'll be able to just automatically look at this and go, this, and this. And then you'll be done. So, and then other people will be looking at you saying, what? How are you noticing that so quickly? But that's just how it ends up being, right? So in here, so we have low swept out, price action runs high. We've got a daily low at the base of the current move. We've got a 4-hour low at the current move. Daily high? Nah, that's not a daily high, right? Nah, that's not a daily high. That's a 4-hour high. So we've got a 4-hour high here as well. 4-hour low, it's just been taken out. So we took out 2 highs within here. So it means we come down to the 15-minute. No gap, no gap, no gap, no gap, no gap until here. I'm going to change this quickly to save as short orders. Excellent. Yes. We never know. You're right. We never know. Your logo is wicked. Good. I'm glad you like it, dude. This bad boy. And again, everything we have has meaning, right? So ride that wave of the market. Look at that. Yeah, we paid to have that designed. We did try a couple times to design it ourselves, but it's good, right? Simplistic, eye-catching, meaningful. There's a message behind it. Okay, so right now, we either do this, we run up, take out that, we produce a new area, which I don't think is likely, or we see lower pricing to this low. So I reckon, this is what I'm thinking, right? I'm thinking something along the lines of this. This is not disclaimer, this is against what my trading system is telling me, which I don't encourage you guys to do. Visibility daily. Beautiful. So I believe we're going to have something along the lines of this. That's what I think anyway. If we breach this high again, we're going 100k. Simple as that. Or these two don't react at all. We don't. Well, these are the options. We either do what I'm showing you here, which it takes up to 100k, or we come up first and go down, or we just go down. They're the options. Or it just goes up. So there's 4 options. Currently, not much going on there. And again, you can apply this same logic and understanding into the lower time frames. You can fractally apply this system all the way down into like the seconds. Okay, let's go GJ. Let's go GJ. Okay, bearish bias. Our bearish bias, by the way, was established here. And the bias has not changed. Okay, so first thing I'm going to do is that. Second thing I'm going to do is that. Love GJ. Long, it's my baby. I'm biased short right now, though. Unfortunately, Martin. Let's see. Jesus, the daily lows have been getting absolutely turned. They've been ravaging the lows. Okay, so we can then go like that and go like this. Beautiful. Never short GJ, that would hurt me. Or I don't know, it might hurt you if you don't, if you don't decide to follow it. I mean, there was a long period of time, not long ago, when it was running so bullish, it hurt. Like, it hurt. Like, look at that. It has relatively long periods of selling off. If you look at this is daily chart, so I mean, from here we're talking a good few weeks, and then it keeps going up. But there are points where it does have a relatively long period of selling. But yeah, I completely see what you're saying, my man. So just going to mark this daily low here. Again, this isn't necessarily needed, but this can give context as to what we're seeing now, which is what we want, right? 4 hour. Ooh, there's some liquid. There's some liquid. They say don't take trading personally. Yeah, don't take it personally. Please, don't take it personally. Yeah, if you take it personally, you're going to end up being a very sad person. And that's why, oh shit. That's why you'll see a lot of the time, even if I take a loss, my attitude generally doesn't change. And the reason for that is because if you have an emotionally fluctuating person that trades, they don't follow a trading plan. It's simple as that. Simple as that. Like, that's just, there's no way to even change my mind on that. That's just how it works. So we come down now, look into the, so we took out a high here. We actually have a high here as well. So we'll see what's going on the 15-minute. We haven't established shit. We haven't established that 4 hour low just yet. So we're still waiting for that to establish, which is right here. So we'll wait for that. Let's just come down 15. Oh. Oh. That's us right now. That is us right now. Previous high that was taken was here. So that's us right now. Let's make this smaller again. Okay. Good high there. So let's see. This is a daily low. First bullish FVG on the 15-minute to form is here. Look at that. Look at that shit. I'm just going to change this to green. Look at that shit. What the fuck? And that's counter. Because of the daily low that was taken here. We have no bullish FVGs until that point. Maybe it's just a coincidence, right? Maybe. Maybe. Never know. Yeah, sorry, Martin. It is a bearish bias. Sorry, my dude. Okay, so we're bearish on gold again now. It wants to fly. I know, the Japanese government don't want it to fly. I mean, the Bank of Japan, sorry. The Bank of Japan are doing their damnedest to keep that shit down. Yeah, to be honest with you, dude, I honestly think it will continue to go high. It's like this gold markup. We've got a bearish bias for this, but again, that's because we're following the systematic entry criteria, which is one of those things. And you know as well, often the way we think something's going to go doesn't actually play out, and it hurts us even more. So now I just don't even do any thinking. Well, I do, because I always give my honest opinion, but I don't do any thinking. I'm just like, no, it's my system tells me this. Highs, so we don't have a high there. This is a daily high. Make sure there's a high here. There it is. So we've got 2 daily highs, 2 daily lows. Daily highs are more condensed, they're closer together. So we know that that means higher volumes of liquid. Doesn't mean that that's where price is going to go though. Okay, so 4 hour. This is kind of looking like Bitcoin. Very sparse in terms of actually like usable points. Those lows looking pretty tasty though, right? Cool, now we can mark up these points here. No, not daily, 4 hour. Cool, highs, highs, highs. Bearish bias was established at, let me confirm this, here, 26, so we established it as we went into the 27th. Come back to the 4 hour, so our bearish bias was established here. So we can't use these as valid points to look for 15-minute areas because our bias wasn't established till then. So we've actually taken any highs since we've had a bearish bias, which is also an interesting concept. It's actually a very interesting concept. Again, this stuff's not essential. It doesn't need to be highlighted, but it's always worth having it. Because remember before this, our bias was long. So let's see in here. This is the setup that we actually followed, I believe. From here, our bias was bullish. That's what we showed you guys in the live stream. Pretty sure that's the point. Yeah, it is. It is the point. Also go to the daily time frame. Daily low there, but Okay, yeah, that's cool. That doesn't hold any relevance. That's fine. So as it stands, we have two lows that were taken out here. That's what I was looking for. Two lows that were taken out. And then we took out the 4-hour low, we create that space, we push bullish. Now we have a bearish bias, so we're looking for one of these highs to be taken out. And we target the lows. Yeah, just come down to 15. These were targets before our bias changed. So we can't use these, we can't say, oh, there's an area here, and that's not how it works. We need to establish a new high being taken. Do you reckon that XRP will keep pulling back? I want to go long for a swing. We can have a look. I'd like to say that between my non-financial advice opinion and your understanding of investing, you've actually been able to capitalize on some pretty good things, right? I'm seeing a mistake in this again, though. That looks like a mistake to me. High is 29. Low is 36. That's definitely crossing over. That's definitely crossing over. There's no high. Yeah, there's no FEG there. Why am I even looking at that? This is wrong. This bias is wrong. See, that's code base is just not. What's this one saying? This is saying bullish as well. So there's an issue with the code base there. We'll leave that up there anyway. I honestly looking at that, I wouldn't even consider that a pullback. To be honest, I wouldn't even consider that a pullback. What I do consider though is that we had this gap right here, which we'll actually mark up as short. Oh, we had this gap right here. We haven't developed a new gap. There's no gap, no gap, no gap. We started to pull back really gently after sweeping. We didn't even sweep it. We swept this 4-hour high. So go to the daily. Let's just do what we were doing earlier. Oh, I'm sitting there saying the code base doesn't work. I'm on the wrong time frame. Fucking idiot. Okay, so the bias is bullish. That's great. Oh god, sometimes I wonder. Okay, so we have our daily high. These are daily lows. So time is half 1, 2 o'clock. Oh my shit. Okay, daily low, daily low, daily low. Daily highs. Okay, nothing really to show here. Just daily highs and lows. That's fine. That's kind of what we expect. Right. This is where it gets interesting. This is where it gets interesting because there is a lot of liquid sitting at these highs. So for anyone that's just joining the stream, welcome. I hope you're all having the best day and the best week. Now we are midweek. It is hump day, as many call it. But don't get down in the dumps. Today is a day you can learn a new skill and begin to apply yourself in a way that you maybe haven't done before. Exactly the same way I did when I decided to quit my day job and take this up full time. Everyone starts off as a newbie, so don't be afraid to be that newbie. And remember that all of the content that is shown here on the YouTube, all of the stuff I teach you in the live streams, it's all taught in the Keep It Simple series. And of course, there are other times when it's going to be taught in the live VIP sessions and some of the private sessions, but you can learn it all by taking your time, taking notes, and actually absorbing the information that I show and teach. Especially in these live streams, there is literally days and days and days worth of live price commentary and explanations, as well as me going through what I'm looking at for the day. So you can go back through all of that if you really want to. I know no one will, but that's the difference. So right here, oh Martin, we might be going long right now, my dude. Looks like we're going long right now. Again, running the 4-hour high, pushing up. This is your next target. And then we have subsequential targets above. 4-hour daily highs, extreme all-time high. But let's see. I wouldn't personally class that as a pullback, to be honest with you. Where we are right now, I think it's just a small reaccumulation before we go long again. So let's see. UJ? Oh, that was the move that we were showing you guys pre-news. We said this is what a trade setup would look like if you're following it, but we're not following it because of the fact that it's pre-news. This was an L. We took an L on that one. That was a partial. That was a trade, but there was a reason we didn't take that. Oh, because it tapped in at midnight. This was the best move we had out of our UJ bias. We got here. We need to redo UJ, so we'll do that. See what I mean about this? It's alerting us the shit that isn't relevant. Like, why are we don't care about that. We do have a low now, though. We do have a low. Oh, we're done with all the news for today. There's the sell move we were talking about. Looking for that low to be taken out. Euro JPY never came back to the area we wanted to sell it from. This is still going bearish as well. Again, I think this is because of the red folder news that came out on Euro at 1 PM and at 9. And we're coming down towards some major liquid lows, so taking those out could be very lucrative. Use chef, we need to reevaluate that, we need to reevaluate that, and this. Any requests for pairs, guys? Any requests for pairs? Okie dokie. Morning, what's going on? EWZ Brazil. What is that, my friend? What is the US Thanksgiving bank holiday? Right, yeah. What's the pair for that? Like, what would he call that? EWZ. This? It's just EWZ, right? Jesus. We have a bullish bias on that right now. Wow. God, that done well, didn't it? And since then, it's just been consistently going down. Okay. I'm going to try and find a different chart for that. Let's try this, see if it looks any different. That's not correct. Okay, we'll go with this. So this is going to be kind of hard because the trading volume's low. The candle layouts aren't theoretically displayed in the same way. So we're going to have a bit of trouble with this one, I can imagine. Well, it's not even trouble. I just don't want to be like, this is it, when in reality it may not be. So as it stands, we have several points here that are being taken out because they're not really painted correctly. And again, this is down to the level of liquid that's being moved here. So these are daily lows that are being taken out. Daily low that still stands. Then we have daily high. Daily high. I need to bring this in. Okay, so, and again, if anyone's wondering, what the fuck is this chart? This is a request from a viewer, and we do take them. So if you want a chart marked up, then feel free. And again, don't take it. This is what I'm saying. Don't give it to me to get a trade idea from it. Get it so that you can see how I negotiate going around the higher time frames, establishing my bias, and then how we begin to actually work out where we may be able to trade from. Euro, low line crossed. Oil, please. Of course, Andre. No worries, my dude. That's not 4 hour. That's a daily. Cool. So we've got a cluster of daily highs and we have one daily low. Come down onto the 4 hour. Oh, this shit is crispy. Couple questions. We differ in time. I usually say you don't take a trade past 10 p.m. What does that imply? Is it a trading ABT session? So the reason why you don't take it past 10 p.m. is because in GMT, so 10 p.m. GMT is when you have a thing called market close. You might call it spread hours. You might call it, I don't know what other people call it, but generally what happens is the market is going to close for an hour and the spread is going to increase massively. The volume's going to drop to zero and it's pretty much only going to be available to big corporate companies that have access to after-hour tradings, which aren't very many. Again, you can look into this. Based off of that, you're going to end up having... Actually, I'm not even going to bother marking up the rest of these. Sorry. Let me just finish this. Let me do this and I'll explain to you. I don't want to give you like some half-assed explanation. Okay, we're bullish on this unless we leave a gap open. This is honestly the lowest liquid pair I've seen for a while. We've run this. So if we open up a gap, not that we're going to see a gap forming, there is potential for a bullish move to come. I believe this is what we're going to be seeing. Run down to the low, then a gap will open up and the long will come in. That's what I believe. Again, not financial advice. I've never looked into a low volume pair like this, so I could be completely wrong. As always, I mean, I could be completely wrong any amount of time. But that's what I'm looking at. This daily low to potentially push us back higher again. Hopefully that helps. So going back to what you were saying about the... What you were saying about the 10 p.m. If we look, right, let's just go to Euro. Let's go to 10 p.m. Look at the way from here, from around 10 p.m. Look how low the volume is here until this point where it opens back up again, you get some volume coming in. So it's a very low volume area. Also, based off of the principle, we call it the Asian session. It's just Asian session is low on liquid. And an easy way to depict this Asian session is go to indicators, get to FXN Asian session range by Rob Minty. Of course, it's going to throw that at me. Let's just delete that. Get this here. When it applies, you'll see this area. Oh, this does 1 a.m. This does 1 a.m., not 10 a.m. You can adjust them, I'm pretty sure. Yeah, so you can adjust it to do like 10 to 11. So it will then ultimately show you the best areas to stay in or out of a trade. You'll notice a lot of the time, these areas will have the lows taken out of them. So for example here, then price will come up, take the highs, and it's like a two-side sweep. So during marking liquid high and lows, you mark even those inside candles enclosed within one big mother candle, i.e. Bitcoin daily time frame today. Do those structures play well as other liquid high and lows? So let's go and check that out. I think I understand the question, but I also think I might be missing one slightly. So daily. Oh, right. So you mean this, right? If so, that is not validated as a high or a low. Obviously it's a high, we know it's a high, until the preceding candle is closed. So we have you can't see this, but we have 9 hours 43 minutes left of that candle. So until that candle is completely formed, you cannot call it a low. The same as if I rewind this. So if I rewind it to here, this would not be a daily low until the next candle forms. Then we can say, okay, that's daily low. Okay, so it has to have the candle before it and after it form either higher or lower than it to define it as a high or low. So a high would be a wick that is higher than the candle before it and higher than the candle after it, and a low would be a wick low that is lower than the candle before it and the candle after it. So we're going to go over to oil now. Take a look at oil for Andre. Andre, the oil magnate. Okay, so we're just going to go from the top, and we're just going to mark it all the way down for you. So daily bias is down. Daily bias is down. Just mark that as well. And that. Sorry, I mean the lowest daily low among these two. They are within a range of a big candle formed previously. Okay, let me just go back and answer that question for you quickly. I'm sure Andre will understand. Sorry. I mean the lowest daily low. So here. They are within a range of a bigger candle formed previously. So are you referring to this low being within this and this, right? So technically an internal low. This is low 1, low 2, high 1. The only other thing you could do to make this easier for yourself and easier for me to help you would be if you're in the Discord, draw on your screen and post what you mean. And then I'll be able to give you a more detailed explanation. So back to oil for Andre here. Okay, so we have a bias of bearish. It's low 1. Yeah, so low 1 would still be highlighted, whether it's encased within a high or low or not. The reason for that is because it's still a point on a daily time frame where liquid has been placed and left for longer than the period of 1 day. So it still holds value as a high liquid point within the market. But yeah, if you have any questions that when I'm not live, things like that, that's what the Discord's for. You guys are fully welcome to post your workings and ask people for help. And I'll obviously be able to help as well. There's people in that Discord that are fully versed and experienced with multiple systems that I teach. So you'll be able to get the answer for pretty much any question. I'm confident of that. And if they can't answer it, then I'll be able to answer it. So it's a win-win. Daily lows right here. So that's what we have. Yes, no problems at all, my dude. It's really no problems. So again, lows and then the 2 highs, right? So we'll go down to the 4. Remembering at all times the bias that we're looking to play from. Okay. So we can mark these as untapped highs for our highs. Brilliant. So we can see in here there's a high that was swept right there. Daily low sitting quite close to current price. I've said before, this part isn't actually essential marking the stuff that's been taken out, but it just gives you a little bit more context as to what's happening. Right, then we have, see, this is always something to look at, right? If you have a daily low, and then you have 4-hour lows that sit right on top of it, because if you look at what we have now, we're going to be looking for a bearish move to come in, right? That's our bias. Whether it happens or not is a different story. But what will we use as a point of reference for price action moving in a given direction? Well, we're going to use highs to find an area of relevance, right? So we've got 2 highs sitting right on top of each other. That would then give us a clear area to trade into the daily and the 2 4-hour lows that are seated here. And then possibly the deeper daily low that sits further down in that chart. Now, it doesn't have to do that, of course, but we're bearish, so that's what we're looking for. So we come down to the 15-minute here. And notice how this was taken out. Why isn't that marked as taken out, actually? This was taken out. So notice this is an example of what I was saying to you guys earlier. You've got your Asia low, Asia high. The low gets taken because it stores liquid during Asia. Then they come up and take the high. Okay, so if you have the Asia low interacting with price in the way that your bias permits, then it's a very handy way to establish a point in price to start referencing from. So from here, we haven't had any gaps. So we've had money out. We've had no money in. So a continuation up through these highs would be great, because then when money in comes, we know that it's taken significant points of liquid and we can start to follow that point down. So we'll just wait and see what this wants to deliver here. How funny, you see the same thing. Andre, you've been seeing the same thing for frickin' months, my dude. Literally. I'm just messaging my business partner here because we're having discussions back and forth trying to get this bot to where it should be, as well as getting the indicator coded. There's a whole lot of stuff going on in the background, so apologies if I just drift off into silence every so often. Okay. Lack of self-belief. Well, don't have a lack of self-belief, dude. Some of the setups you were posting like last week and so on, and the one you posted yesterday or this morning, I think it was great. That was a great setup. So what one was it? What the fuck is Rune to the US Tether? What the fuck is that? Okay, regardless of what that is, this setup. So, okay. I'm about to post your Rune trade in here, Andre. How's that going, by the way? Right here, using the money in, money out concept. Now, this is the money in, money out indicator that is on the screen right here. So you can see the point when you depict the correct one, it will deliver in the correct direction. Right, I just need to do a quick voice message. One thing. Still in it? Okay, let me see. Let me see it. Let me see it. Rune to the US Tether. It's a proper random pair. You're in from here, right? Asia high tapping. That, I mean, looks like it's going down, dude. Looks like it's going down to me. Take out that high. Looks clean. Right, I just need to run to the toilet, guys, and do a voice message, and I'll be right back. Right, I'm back. Jesus, we dropped all of our viewers. Everyone said, fuck this guy, I'm out of here. That's fair enough. So, let's just have a looky as to what we have going on. So I'll probably be live stream for another 10 minutes or so. Yeah, maybe. We'll see. Quite a few people have dropped off, so we've obviously lost a bit of the audience. That's fine. But we might as well capitalize on that. I know you're still there, Andre. I know. You're always there. You're always there. I appreciate it. Now, what we're going to do for the remember, this is the area I was saying about. I'm not trading. I wouldn't recommend trading XRP short term, to be honest. Just not really. But your trade would look like that, and then your targets would be up into these highs. So 1-6. It's not too bad, but spread on XRP and swaps and commissions and all that is going to be pretty high. Not with every broker, but most, especially if you're looking at a Forex predominant broker. But we're just going to do a quick look through what we have and walk you guys through what we're looking at. So, starting off on Euro, you can see we've come up and taken out a considerable amount of. Let's put the timer on for this. Cool. Yeah, cool. We've taken out a considerable amount of. What am I doing? Yeah, of highs within here. Okay. So these highs and these highs, these are acting as liquid. This is the last major point on a higher time frame of liquidity investment. So we're now looking for excuse me. We're now looking for pricing to deliver one of two things. Up into the high to travel down, or to travel down through into these lows. That's the two scenarios we're looking at. Now we do have potential for, I believe, let's see on here. Okay, no, that won't work. So I was saying that that's potentially a high, but it's not. So we're just looking for that sell move down, or for price to come up to give us a point that we can actually follow down into the lows. Yeah, very clear. Euro NZD, we're looking for the same thing. Either a run up to the high to then give us that push down. This is orange because it's a non-confirmed daily low. Euro, we're looking for the same thing, a sell-off from here to take us into that daily low, or for price to push up into the 4-hour high to give us that delivery again into the daily low. Euro GBP, we're looking for this to run down to give us a push into the daily highs to follow the bias we have on that. Worst case scenario, it comes down, doesn't deliver it, and our bias is wrong and our entries aren't given. Or it pushes up without us, right? We're bullish on GU. That's a lie. We're not bullish on GU. We're looking for this to run into the highs and then sell down. If it wants to do that. Or sell down beforehand. That's the options for that one. GJ, we're looking for the same thing. A sell down into the low or a run into the highs to give us a low move down. Even though the higher time frame has probability to run into a bullish direction, at the moment it's not showing us that. Especially with our analysis, we're seeing it line up more for a bearish bias. Gold. Down to the lows. We're bearish on this too. Clustered lows. Liquid high. Coming back over to oil. We done a markup on oil, did we not? Yes. Run the highs and then take out the low. That's what we're looking at. And if we go to the 15-minute, there's still no gap. Now, there could be a gap formed here, potentially. We've got 6 minutes left on this candle. I don't think it will. I think it will clear that. But there's potential for that. Ultimately, I'd rather see it run these and then give us that. That would be great. So we'll see. So that's a full breakdown of all the pairs that we're looking at for actually taking a setup from, and the understanding of what we're seeing with our biasing. If you guys have similar outlooks or you have trades that you're looking to follow, then make sure you post them in the Discord. If you're not already a member of the Discord, the link is down below and you can join very easily. I look forward to seeing everybody in tomorrow's live stream and of course in the Discord tonight and tomorrow morning. I'll see everybody in tomorrow's live stream. Have a great rest of your day. Thank you all for the love. If you haven't already hit that like button, you know what to do, and I'll see you all tomorrow. Peace out. What was I going to say then? Stay within your trading plan. Keep it simple. And of course, always use appropriate risk. Still looking for that day I become profitable. Andre, I believe it's closer than you think. You were almost on the brink of passing that funded challenge. It was just one small mistake. But then that's part of the learning process. And the distance you've traveled since you started is tremendous. And everyone else can follow the same path. So I have no doubt in your ability. As for everyone else in the live stream, I have no doubt for your ability either. It's about the time you put in and the consistency that you apply. I'll see everybody in the next one. Have a great one, guys. Peace and love.